The used car market, Dad, it is changing every single day. Lucky Lopez did a great video talking about the mistakes dealers are making by not selling cars and just taking their losses now and how they're just going to take bigger losses in the future. Great video. Check it out.
Yes.
I thought, Dad, let's take some time in the midst of the CarMax news, Lucky's video. Let's talk about the darling, the belle at the ball earlier this year, Carvana, a company that previously was worth tens of billions of dollars. Their stock has tanked. You've run the numbers, Dad. We think Carvana's screwed. Is that hyperbolic?
Well, everything you do is hyperbolic, but there is a term in the automobile industry, and that term is oftentimes a dealer's inventory can be, well, underwater. What do we mean by that when we say the inventory is underwater? As an example, let's say 90 days ago or so, Carvana purchased, in the 30 days prior to that, 100,000 cars.
Which is not unrealistic because quarterly they're purchasing hundreds of thousands of cars. Yes. At least they were.
Okay, so let's say that between 90 and 120 days ago, they bought 100,000 cars. 90 to 120 days ago was the highest value of pre-owned cars at a wholesale level. Let's say they bought 100,000 cars and the average price they paid was $25,000.
$25,000. Okay, works for me.
That would be $250 million of inventory.
Yep, that they
purchased. Since that time, wholesale values across the board have declined between 10 and 15%.
And can we just pause for 1 second, Pops?
Yes, sure.
Carvana's whole strategy was we are going to be the top, we're going to pay top dollar directly to the consumer to get this inventory because our business is growing so quickly. We need more and more cars. So I guess just to set the stage a little bit, Carvana was paying top dollar. And if you've ever used the join YAA.com/sell feature, you would have seen Carvana was making an incredible offer relative to CarMax or Car Gurus or even Vroom at times. So they were paying a lot of money, overpaying potentially for those vehicles. Then over 3 to 4 months, the values go down 10 to 15%, like you said.
Yes, and when we say they were paying more money, it's like when you're at the auction and your arm's up and you win. Well, you were the highest bidder. Okay, Carvana, when they were buying cars, was the highest bidder.
A lot of the time, yep.
So let's assume that they spent $250 million for inventory, which has since gone down somewhere between 10 and 15%. That means that $250 million worth of inventory has lost somewhere between $25 million and $37.5 million in value. That inventory is somewhere between $25 million and $37.5 million underwater. Okay.
Not to mention their reconditioning fees, the fact that
if they actually recondition. Yeah.
You know, anyway, the stuff that Lucky mentioned is like there's fees associated.
The marketing fees, because God knows when this video runs, there will probably be a Carvana ad that runs before this video or during the video. That costs them money.
Yep.
So
Thinking about getting auto insurance? Compare quotes from all the major carriers in one place. Join YAA.com/insurance. It's quick, easy, and no spam.
So assuming that they're underwater on that inventory, they don't want to necessarily take the retail loss. So they're not lowering their prices to the degree that they should, with the hopes that either people will make the mistake and not know better and pay the prices that Carvana is asking, or that they can just find somebody that's, I don't know, been living under a rock for the past year. So their inventory is worth considerably less than what they have spent for it. They're going to take some huge losses. Now, God knows they're not unaccustomed to huge losses.
But let's hit on this for a second.
Yeah.
They're going to take some huge losses. Their business already, on a per unit basis, doesn't appear to be profitable because when they were making money on vehicles sold, their total margin for the quarter would still be negative.
Yes.
They had one profitable quarter.
Ever.
So what the hell happens now when they're not making money on the vehicle that's sold? You're actually losing money. Because imagine they have to turn around and wholesale some of these units. They're just going to lose money left and right. Plus, your core business doesn't even make money because you have so much overhead costs. That Carvana earnings, I was typing away here for a second. November 3rd.
Yes.
After hours on November 3rd are Carvana's earnings. We did a video. We talked about CarMax's earnings, the fact that they increased their loan loss provisions. They more than doubled their loan loss provisions. It was like an alarm bell sounding for the used car market. CarMax is the business that's been around for decades. They're the stalwart. They're not going anywhere. They'll be fine. Carvana is the business that was built on the back of Ugly Duckling and then Drive Time, and definitely a bit of a interesting background there with the family that runs the business. I wouldn't be surprised, man, if this isn't sticking around forever. And if that's the case, this quarter is kind of the precursor to that, because you're calling it out right now. They're going to lose tens of millions of dollars on this inventory.
Just on their inventory. And God knows they have only had one quarter in their entire corporate history where they have made money. And earlier this year, they took on $3.2 billion in debt. So one has to wonder if they're paying way too much for their inventory, and we can extrapolate out from what they've been paying and what we now see going on at the auctions on the wholesale level, what their inventory might actually be worth in comparison to what they paid for it. And their inventory is probably worth somewhere between 85 and 90% of what they paid for it. How much longer can they actually stay in business?
I think it's a fair question. And to be clear, the reason we're harping on Carvana is because their strategy was pay top dollar, get the inventory, recondition it quickly, own all the capabilities. Like they own the reconditioning piece, they own the finance piece. Like they wanted to do everything in-house, and they were really aggressive to buy the inventory. Other dealers were also aggressive, like Echo Park, Sonic Automotive, the Penske Group, like dealers were aggressive, and dealers are going to take considerable losses. Again, Lucky's video is an awesome overview and exactly what's happening and why the retail prices haven't come down as much, but the wholesale prices have fallen, and these dealers are going to be feeling it on their balance sheet. Carvana is the perfect example of trying to grow too quickly. The market did a 180 on them. They're screwed.
Carvana is the perfect example of hubris. It really is. I mean, we're going to create a whole new way to sell cars. We're going to create a whole new way for people to buy cars. And we're going to prove to the world that ours is the right way. Well, meanwhile, they've had one profitable quarter in their history. It is pure hubris. And the founders have made billions.
Billions, yeah.
And the investors will get stuck with losses.
Welcome to America, baby.
Yeah. It's what makes this country great.